All right, what's going on, guys? Diving deeper day 5 and 6 combined. So yesterday was pretty much a flat day for me. Unrealized wise, I was red just because of end-phase energy. I had end-phase energy calls yesterday, kind of like over here on this print, and then I added into here. I added within over here and like on this dip. So my average is around that spot, and I'm looking to go back break even on that today. Very well mitigated trade. I was down about 30% down here on next week expiry. But whenever we look at this and you go, what are the rules? What are my typical rules that I look for in terms of where to add? It's swing low, swing high, look for the 50, right? And then we had a wick off the 50. If we go to the daily, and that's kind of where our low day is at, right? So my average is decent on that. It's probably somewhere around up here. I was about break even up here, but we're going to wait and see if I can get that into break even into close. Now, where is the charts that I've been talking about and slamming the table on in terms of I had a lot of sloppy trades today, but we got to think in terms of probability, rate of probability. We need to think in terms of where the probability is and how it aligns up to favor us. And those have been the charts that I've been slamming the table on for quite a while now. They've been, what is it? What I've been talking about in terms of rolling profits, in terms of repositioning, in terms of looking for another entry. What have I been talking about? It should be pretty obvious. It's Nike. So whenever we go over to Nike and we take a look at this, I was thinking to myself today, I started off the day with having my remaining calls from last week. It's this week expiry, so like it's very slight amount of runners. It's not too serious. But what did I talk about in terms of Nike and kind of how it would play out and kind of how I was looking at this would be a path of least resistance, because we have two tests, two internal tests. We break those tests, and then what is all of this up here, guys? This is all fresh resistance, but this could be inventory that was moved down for more of an aggressive sell into here. So whenever you get the expansion and then you start getting a flag build out, watch the volume off of the upper ranges of resistance. Is it forceful? Is it a very liquid resistance? And there was no really crazy move off of this resistance. There was on the underlying, but it was really low hourly volume. It was only almost 100,000 volume over here, and that's relatively very dry when you're looking at like opening range volume. So whenever I looked at this and then I saw it kind of stall towards the lows, I'm watching this for the next day, because these candles over here yesterday, right off the opening print, it was just a really, really, really bidless sell. And sometimes bidless just means that there's not a lot of ammo being put on the order book over here. There's almost little to no buyers, and any sort of buyer that comes in isn't big enough and he gets swallowed up. And that doesn't necessarily really resemble the stronger hand, because we're breaking this resistance, we're testing into fresh resistance, it's low volume, we're developing trend, and we're developing potentially higher lows on like the hourly, right? So I was looking for like some sort of higher low off of this wick, because this wick was kind of like a very pivotal higher low, where this higher low kind of held this previous resistance, and then it based out and moved its way higher, and then we got another higher low. I'm looking for a third higher low over here. What do we notice with Nike right off the open? Well, we noticed the red to green move, and then the higher low. Where's the higher low off of? It should be pretty simple, guys. It's off of yesterday's resistance look over here. It's also off of take your swing low, take your swing high. It's also right off the equilibrium spot, and it's also kind of nearing that risk level. Where was I looking at this from? It's also nearing that risk level. If you're looking at low of day over here. Oh, there it is. Okay, so you guys remember I was talking about in terms of the chart, we were talking about this little progressive bear gap spot over here. So I had this marked out the whole entire time. So basically what my execution was what I was looking for in terms of my execution was something that looked like this. Okay, so that's exactly what we got. We got a higher low from the daily wick. Added more exposure over here, had the previous exposure from over here. Was very heavy over here. Then we caught the expansion all the way into that external. Keep in mind, our last test of resistance was low volume, right? So that's that. I had EMPH off the open. Nike looked like it was stalling. It just overall looked like potentially a bad day was coming. and then I had Ford overnight. So Ford is a ticker that just doesn't like to move at all. I talked about how this was one where we broke however many days of support was established here with a very aggressive breakdown beneath that spot, and then we rip back higher, we break the trend line, we come back down to retest the previous old support. I that's a decent long side trade, given the fact that I'm probably going to be that I would ever, if I were to enter into this with serious size, it would be risking probably the $12 spot or like $11.95. So whenever we go to the 5 or the 15, we'll go to the 15 and we look at this. I had Ford calls kind of on this like $12 base over here, right? So whenever we started claiming 12, I bought these. They went up about 30% on this 11-cent move I caught. And then it gapped down into my entry price. I re-added more, and then I went green again. Not green enough, 20-something%. I'm not looking to play next week expiry. One strike in the money, a $25 premium for 30%. I'm not looking to flip that from 25 to 30. I'm positioned in this trade to look for a potential nice expansion on Ford into like 1250, 1260 to get a couple 100%, because that's just how the premium is, and that's just how playing short-dated Ford goes. Catch a move on the underlying or don't even bother with it. It bled, it recovered, and then I just cut for like the smallest loss ever just because of the spreads. So that wasn't really anything worth my worry at all. It really just wasn't. And then I had I had Nike, I still have some. I had Nike, I had Enphase Energy, which is the one, like I said, that I'm looking to mitigate back into a break-even trade. Average is kind of like on this yesterday's base. I had Square for weeklies. Okay, so I scalped Square real fast. It was kind of just on this breakout, very dumb trade. Don't even really want to talk about it. Very light size, not super light size, but like light enough to the point where as soon as I went, or light enough to the point where I didn't take it at 20%, and then I kind of just scaled some at like 30 something percent, and then the rest of them stopped break even. Nothing really too crazy there, just a quick little scalp. Don't even want to talk about it. Didn't really make much of a difference for my day. Nike was the banger, and then we also have DraftKings that I'm long right now, and it's still moving really nicely. I talked about how this was a dip buy for a very long time now, and then what I was looking to do was execute off of these day highs, which is Tuesday's high, Friday of last week's high, Thursday of last week's high. I'm generally looking for these little spots over here to look for a break in base and go. This is also a bull gap that has been filled. This is all distribution, and then this was news that marked it down with a buy wick off of the bottom. However, we did sell off and create a new low. That low is being accumulated, and then we kind of just based and were wiped dry of any sort of sell that looked a little bit alarming over here, right? So when we're looking at this and you find your lower high, and then you start selling from the top of the lower high on lower volume, and then you start finding like a double bottom followed by the next following day a failure off the open with another lower high, that lower high resulting in the lower low, now below the bull gap, but basing, and then you start building out higher low structure. I'm looking for a simple break, retest, hold, and move, probably up to this opening print of this day where the news came out. That's all I'm really looking for, and that trade right now is up probably about like 30-something%. So that's that. I could have taken SQ, but I didn't really want to re-roll this because I had some other positions that were doing really well. I had ZOM. ZOM was a really nice one. It was basically just a break, retest, hold of 113 in a move. I said I was watching this on the XLE sector itself, the XLE sector over 90. And then this little leg down kind of sketched me out, and then I sold. And then I also had Valero from like over here for like a pop, a higher low, and then I tried to scale into momentum with this higher low. I executed these positions around like 11 o'clock, 11:10, something like that. So I took over here in resistance, but whenever I started to catch the follow through, that's whenever I started to scale a couple contracts and set the stops break even. ZOM was definitely a cleaner chart of the two, just because of kind of where we are at on Zon with the previous support, and then this opening bear gap progression spot, this opening print right here. If you're looking at this little red zone, whenever you go into the 5, you're going to be able to see how it was very well nicely resembled with like a test of this resistance and a hold at 1283, and then we did get the expansion in the move over this opening print, as well as like the 113 psych. So that's a beautiful risk to reward right there, and this is kind of how my trade criteria kind of looked. I think it was like an entry over here, and then I had a stop here, and then I had a take profit that was like on this low a day. So I scaled a little bit of Zom, didn't really realize anything on Valero, maybe a couple contracts, but yeah, so this is a really hectic trading day because I had energy on watch over 90. I was looking at DraftKings Relief. I was looking at Nike. I was looking at Enphase Energy because I already had a position. I was looking at Ford from the previous day. And these two trades were just flat. So I was like, you know what? I'm not even going to shift my focus here. I'm going to go into other names where I have a plan established, but there's still opportunity showing within that plan itself. And that's exactly what I did with Zom, Valero. I was also short Google in the morning. I talked about this plan as well. This is a simple sweep retest of the previous day high. Here's previous day high, and then this is like what the progression on the chart that they're fighting for is this gap followed by a failure, retest and a fill of it, lower high, gap, and then we obviously claim and hold this gap, and then we move our ways higher. Now we move our ways higher on relatively low volume, but I'm gonna keep watching this one. I shorted over here for a lower high off yesterday's high. That's all my risk really was. I was risking probably like this lower high over here. And then I was looking for a target down into the bottom of this. Now, I understood that it probably could have held over here, but I was more and less looking for like a target down in the like 175 range, 175.50. It only went to 175.85. I was on biweekly expiry. So I caught like a 70-cent move here, but I just went stops, break even. I said, you know what, I'm not even going to deal with this because I have other trades that are winning and that look good and that are really shaping up. So I'm going to focus those, and then we'll see how it goes. Never really had any problem with that one. So I was kind of mitigating risk on a lot of these charts. And I would say the speculative, unneeded trades were more and less like Ford. There wasn't a lot of serious size within Ford, but Ford wasn't necessarily needed. Nike was a beautiful one that I've been watching for a while. That's something that I definitely should be taking and be watching day in and day out over the past couple trading weeks. Zom, very beautiful trade. And then obviously Valero was a decent trade, but that's not Valero. This is a really compressed chart, right? And this is kind of like your secondary lower low being bought within a bull gap, as well as a retest of this weekly level. I already caught calls here. I think this was, when was this? Was this Monday or Friday of last week? I caught calls Tuesday, I know. And then I did catch calls Friday of last week as well. So I'm already done with this. I already realized what I needed to see on this trade overall and on this read. Definitely didn't need to do any more with it. You can't just keep on trading a name. Now you can see Ford's definitely catching a little bit of attention. This is another day where the risk level definitely was valid, but Ford ain't the greatest options play just because of the volatility in options is very time sensitive, especially on lower expiration. Although whenever you do catch like a 10-cent move on Ford, you'll be up a nice little base hit. So it's not anything, the premium isn't overpriced or nothing like that, and that's kind of why I did decide to take the trade. I could always re-enter. It's not a big deal. And we can always see how this one really plays out. I think this one should see some upside into like 1220, maybe even like 1250 range. But I set it to the side just to focus on my day and really regather myself and see where things can take me with other charts that I found really, really nice. So that's kind of all I was really seeing for the day. So I switched from my early morning positioning. Those kind of failed, and then I had a GRED trade on Enphase Energy. I still do. And then I transitioned my focus into like Nike. I had like Nike, Ford, and then like Energy, and then like DraftKings. Energy popped up nicely, and I said I got to keep focusing on this Nike because I think this is the one. I put the stops break even on the Energy. So these were all planned trades. DraftKings was planned. Energy was planned. What else was planned? Nike was obviously planned. The only kind of unneeded trades were probably Enphase Energy and probably something like Ford. Those were kind of, getting away from my focus. Also, Google wasn't necessarily needed over here because it was stressing me out for little to no reason. But I kept my calm, and I kept, sticking to the good plan, like I said, which was I told you guys live, this is pretty much where my ads are. My average was right off of this, like right off the 0.50 spot, and this is also where a higher low would potentially be. And then my risk was going to be like, obviously, a loss of like 94 or something like that, which probably would have been like a 30% loss again. But whenever you're trading lower expiration, it ran 140%. So whenever you're trading lower expiration, it's got to be, a profit risk to reward of like a 3-to-1, which is like if you're looking to lose 30%, you should be looking to make like, I know it sounds crazy, but like 70, 80, 90. So you have to have a clear directional read on the name itself. And that's exactly what we had, right? We were targeting this external high. The earnings candle high was a spot where the previous day highs were kind of being established off of. And then all this really was like a retest of this resistance turning now a support. And then we got the continuation higher. And this is all, this territory right here above this red line is an earnings bear gap. So you want to de-risk and take profit on the position up there, which is what we did. Very beautiful trade. Really not too much of a stressful trade there. DraftKings is still moving really, really nice. If you guys want to look at where I had the higher low fill, it was, let's go see. Alrighty. Yeah, so here we are. 11:34. Sorry guys, give me a quick minute. Alrighty. So 11:34 I was long. 11:34 was like right over here. Okay, so that's wherever I talked about it, and I talked about it before that as well. I was pretty much long all day over here. I think I'm gonna stop here. And then here we are. So this is where I was freaking out about my yeah, so I stopped break even. I had the trade long over here before, and then the fill like over here, and then it went up to here, and I said, you know what, if this don't break out, I'm just getting rid of it, and I did. But then I looked to re-add the higher low, and then over here was where I was long DraftKings. I had a higher low. 10:09, yeah. So 10:09 was like on this candle right over here, and then it popped, sold, and then obviously recovered with another higher low off of there. What I was basically risking over here, guys, was either like, it was just about 36.50, which is like this previous resistance, which did get a test off the open, which is very notable, very important to note. So yeah. Yeah, I got to look at my positioning, so I'm going to just close this video up, but that's kind of just how I was looking at the day. And then I also was thinking about longing Tesla, but this is right whenever I was like really worrying about Nike. It was like over here. Whenever it started to see this relief, and then sell, I was looking for like some sort of higher low. And then Nike started moving at like 10.50. And Tesla started moving at like 10.50. So it was a little bit unfortunate there because I couldn't open a new position. I already had a lot of positions opened. And then this was also kind of what I was watching. If you guys watch the weekly scan, here we are.
Boom, and then it starts white test. Um, and then if not, what I would really like would be a sell-off tomorrow. Boom, and then it starts wiping out all of these days of support, and then it finds a quick buyer off of them, and then it rips higher, and you're
Yeah, so that was just a series of lows, guys, that were swiped, and then the day that collected a lot of inventory beneath all of these equal lows was the low of day that now would be defended, like I talked about in that little schematic, where you swipe all the lows, and then you push back higher, and then you put in some sort of higher low from the other day low that collected all that inventory, and boom, there you are. Beautiful, beautiful trade. So yeah, that's just kind of what I've been looking for and doing. Um, there hasn't been a lot to work with in the market as of lately. I would say Zom I probably fucked up on a little bit today, but it's all good. Probably shouldn't have cut that whenever I went break even, because it was right at my fill spot. And as you guys can see, it kind of just built out some higher lows and moved its way higher through a flat top resistance. So, I mean, it is what it is. I'm happy that I came out alive on the day. Now I'm kind of just looking for this one to move. It's a really, really ugly hourly chart. But yet again, solar is a very awkward name and basket. So if I could catch any sort of pop into close, or even a pop above 134 into close, what time is it right now? It's 3:21. So, yeah, probably gonna have to cut this one here soon. It's kind of just staying flat and where I've been in terms of red. So yeah, that's that. There's really not much more to watch on the focus list here. Everything on tech wise is kind of basing. The Nvidia short I talked about yesterday in our public chat on the Discord. It was a really nice one. But other than that, there really isn't much. So we'll see. That's kind of just how I manage my trade, where I mitigated some of those trades, and I didn't even really mitigate much because most of them were green, to a point where like I could have taken like scalp profit, but like I don't do that, because if you think about it, guys, scalp profit is whenever you have a winner on your hands, you're accepting the amount that would be equivalent to the loss, right? So what does that mean? That means that you're trading a one-to-one risk to reward. And what does that ultimately mean for your portfolio? That means that, you know, profitability is going to be harder and out of your favor, considering a loss is going to be equivalent to a win. So one, it's going to drain your mental capital unless you're used to it. Two, you know, you need to have your wins kind of move more than your losses, and that's only going to happen through 2-to-1 and 3-to-1 risk to reward at a minimum. So that's why I sometimes give up a lot of profits on some of these trades that are green, is because of that. And I think it's good. It's for a good reason. It may feel uncomfortable in the moment, but whenever you remove the emotion tied to anything and you just look at results from like a weekly and monthly and quarterly perspective, it will make a difference in my opinion. So yeah, that's that for today.